specific periods, and you may want to close, say, as far as ERPNext is concerned, accounting periods, you might want to close normal sales invoices can be done for a particular period and so on. Then we'll go to fiscal year, finance book, mode of payment. I'll go through the system after this on this, but let me cover at least what is under accounting as far as ERPNext is concerned. There's more, but this is the bulk of it. Finance books, you might want to split your books of account, or especially the reports. For the example given on the manual is for, so you have certain books for tax authorities, and you have another set of books for your shareholders. So you might use a finance book to split this. Basically, you will be tagging a finance book in your transactions. That's the whole idea. You can have modes of payment, payment terms, templates, payment terms, loyalty program in the system. Then we have a concept of opening and closing. So normally when you're starting on ERPNext, normally we load what we call TB balances or trial balance data. So here we are talking open customer invoices, open supply invoices. Open means unpaid. I keep saying this because from a technical point of view, sometimes you don't understand this stuff when the accountants speak. And I see most of the people who register, they are normally technical. So it helps to kind of understand the accounting when you're doing this. But I'm saying opening invoice tool, there's a tool for importing, say, open supply invoices, open customer invoices, and so on. So that's what is entailed there. Then there's the period closing voucher. This is normally at the end of your fiscal year, normally, especially after auditing, you want to close your books, and then you're closing your P&L transactions. If anyone wants, they can chip in and clarify some of these concepts. But the idea is apparently you're moving your P&L balances to, say, a retained earning account, so that when you open the new year now, you just have balance sheet accounts in your books of account or in your system. Then we have under general ledger, here we have journal entry templates. So a template basically is like a predefined, can I say, tool which you can use to kind of automate, to make work easy in the future, for example. So you might predefine like a general template for, let me open one here. So you might have a predefined general template, say, for payroll, for example. So you basically capture the accounts that you normally kind of fill when you're doing your payroll journals. And then when you come to journal entry, for example, all you need to do is pick your journal, your template or salary template. It will pre-fill these accounts, and then you can fill the figures. This makes work easier, for example. Then we have accounting entries, freezing accounting entries. So I talked of accounting period because they are a bit related. So there are two ways you can do this. So number one, you might freeze the period. You might say, for example, we have frozen accounting entries, some accounts until end of July. Basically what this means is no one can post transactions in a period before that 1st of July. And you can even set a role for, say, finance manager, for example. Let me hope we have one here. Let me use accounting manager. You can have a role that can bypass this condition, basically. So you can have, say, someone with a role called accounts manager who can post transactions in these past periods. I'm saying they are related to this because in some scenario you don't want to close like a global closure of a posting transaction. So you can use what we call accounting periods here. To close a certain specific period, and you close for specific transactions, for example. So you don't want transactions to be posted in these transactions. Purchase invoice, journal entries for this particular period instead of a global closure. So that's the difference, or the relationship passed between these. Now that we are here, maybe let me just go For the chart of accounts, it's like a blueprint of every ERP, frankly, or any financial system. But the way they are arranged in ERPNext, and I'm mentioning this for at least those who are new to ERPNext, or those who are kind of looking into it from other systems. So the best way to view this sometimes is as a tree structure, and each chart of account will be based on the company. And you can have your balance sheet side, so you can have your current assets and so on, and you can define multiple, and you can even say specifically this is meant for USD transactions and so on. So, and you can even block them because there's a concept where you don't want people to transact on a particular account. You can have your bank accounts. These are just the normal accounts. You can have your receivables, stock assets, and so on. Your fixed assets, which are the categories, I know these are a bit of your payroll accounts and so on. So if you look at this eventually, because your financial reports will be based on your chart of account, there are scenarios where you might not want people to see the balances for each of the account. And mark you, this is something used. You can view the ledgers for each of the account by just clicking on it, and then you can drill down. A very common thing asked for during this accounting programs. But what I'm saying is, you can go to your, for example, account settings, and you can, not account settings, sorry. You can go to your company, for example, and you can sorry, account settings. So you can untick show balances in chart of accounts. Basically, what this means is let me duplicate this. So when you go to your chart of accounts now, for example, and you do the tree view, then the balances are not visible. For example, you might want to do that for some reason, maybe data security or something like that. But let me just show this for now. Accounting freezing accounts, general ledger. This usually comes as what we call it's your credit and debit side, because every transaction, that's what happens in accounting. But it's the same report we use to generate what we call a statement of accounts for parties, customer or supplier, for example. Let me open this, for example. You can choose dates. You can do filters per various dimensions. I'll come to that. The other filters here. For example, you might want to see this report based on a specific currency. But when you print this, for example, it comes as a statement of account with the name and the period. It will have your debit and credit until the final balance here, for example. And there are various filters for this. There's something called process statement of account. We'll come to that later. Let me go systematically so that we don't lose everyone. This what we call discount accounting. In some scenarios, you might have a sales invoice. I think it happens, and you want to use that unpaid invoice to get like can I say a loan, for example, from a bank. So you can do what we call invoice discounting, for example. There's a concept of immutable ledger. So before version 13, you could create transactions in ERPNext and easily delete them. By delete, I mean you would go cancel a transaction and then you delete. But then because of some standards, it was kind of improved so that you couldn't do that. And that is based on some setup now. So it was enabled where you couldn't delete any transactions. Basically what happens, you'd have to do a contra entry to kind of cancel the old transaction. But I think along the way, it's been made mandatory along the way. So you can enable immutable ledger if you want. It's important because I think some laws, especially in Europe, they you have this kind of an issue on that, especially for franchising. Then we have taxes. Maybe I'll talk a bit more about this. There's what we call tax category account. I'll come to that. But generally, what you do is when you're defining taxes, there are three major category templates you can use, for example. So you can do what we call sales taxes and charges template, purchase taxes and charges template. Rarely will you use this, frankly, or at least we rarely use them in our site. For the simple reason, the assumption here is that if you're doing, say, a sales invoice, for example, let me pick this. And let me pick two items here for demonstration purposes. I'll just pick these two items. So let me pick another different item. Let me pick this, for example. So assuming these two items, one is vatable, say 16%, especially in Kenya. This one is rated or exempt because those are the three categories. There's a fourth one, I can't remember. So if you come and pick, forget this for now. If you come and say pick sales in taxes template, for example, this one, then you're applying VAT, for example, or whatever rate is defined in this template item tax template. So 16 VAT is 16%, exempt, others are zero rated, and so on. So when you do your transactions, whether it's a sale or purchase, then the taxes will be calculated based on the item tax templates. The ones that are zero rated then will calculate based on a zero rate. Another thing to note is the way you can manage this is let me pick what. Let me duplicate this. Maybe we can use this to demonstrate. It's a template for some reason. Let me just use the when you come to Kenya, sometimes they have three of them. So for each sale, they'll do what we call catering levy, service charge, and VAT, for example. So you can have a template like catering levy, service charge. Is just a thing. In fact, they have several. So and you'll pick one from. You can have different accounts for this, but for now, let me see if this will work for demonstration purposes. So you can have this as a catering levy account, and then you can have a. Let me just even pick this account. You can have this as 2%. Let me pick another one. Let me pick this for demonstration purposes. So in say, let me use an example of an hotel. So you have 16%, 7% catering levy. There's usually another one for 5%. They'll always tell you which one. And then another one is 2%. So you can attach this template to a particular item. For example, you can say this, we have 16 and another one for VAT commission. So if you do a sale, for example, the system will automatically calculate all this. It will calculate VAT for this and so on and so on. Let me just do a sales invoice to see what I mean. Or a sales order, it doesn't matter, or a purchase order. I can pick just one item, for example. So by default, based on the item tax template, it will do VAT, for example. But I might come and change the VAT template here to don't accept. Let me just pick VAT and commissions for now. In your reports, you might want to run what we call consolidated financial statements, whether it's for to be of a P&L or balance sheet, for example. So when you do this, for example, it will show you for or the companies. These are the children companies and the group company. You can pick accumulated values in group company, and then it will show you the accumulated figures from all the companies. It's only that the other companies don't have transactions. But you can view this report not only for balance sheet, but P&L, for example, and cash flow, at least out of the box. The other reports are sales and purchase registers. The reports asked from that they are here. So there's what we call a just open payables or receivable. So it's basically the purchase invoice, and then it will show you the amounts for each. The items that were bought for each of the invoice. So it's like a matrix report, the VAT for each of them until the grand total taxes outstanding amount and remains. And it comes with either purchase register or sales register, or even per individual item by what we call a sales item register or purchase item register. Then there's budget variance. Maybe I can cover that when I talk about the budgeting side. Then we have accounts receivable and payable. So let me just go through what we have here, but they're everyday processes. We have purchase invoices, for example, and purchase invoices, much as we are not covering the other modules for ERPNext, they come all the way from what we call a material requisition, RFQ, supplier quotations, LPUs, or purchase orders, purchase receipts, all the way to a purchase invoice. I put landed cost here, much as sometimes it's like it straddles between accounting and the stock. But you might do a purchase invoice or purchase receipt where you're importing goods, for example. But by the time they land here, you want to add additional costs, for example, to revalue your stock. So you can raise what we call a landed cost voucher. The reason it is here, for example, assuming it's freight, you'll be given a freight by another supplier. So in ERPNext, you raise that purchase invoice for that supplier, and you tag the account, say for freight, and then you go do a landed cost, and then you tag the account for freight, so that they knock off. The one becomes debit or credit. I can't explain that, but I know that's how it works. It works very well. Then we have debit notes. They're like credit notes against purchase invoices. So normally how they work in the ERPNext, the design is so good sometimes. I'm not beating drums for it. I have used another ERP for long. So generally the UI becomes very good. But you can open a purchase invoice and do a debit note, for example. That's what I'm saying. Or you can unreconcile. Unreconcile is assuming this purchase invoice is already reconciled with a payment. You can unreconcile that from here, and you can view accounting ledgers or purchase receipts that are connected to the purchase invoice. I'm just showing what you have here. You can raise a landed cost, what I was saying directly from here. So credit similar to debit note, but it's only that it's happening against a sales invoice. Let me just will have originated it's only we are covering accounts and sales invoice efforts under the real accounting, for example. CRM, quotations, sales orders, delivery notes, and so on. But the sales invoice looks something like this. You can have your dimensions. I'll come to this later because this is a question that is sometimes you can do an invoice and you tag multiple dimensions or centers for each of the lines. But a sales invoice looks something like this. It will have your lines. It will have number one customer, for example. The currencies, you can pick a different currency at the time of selling or buying. It's not based on the default on the company. You can do a sales invoice that so this invoice, assuming it's for a stockable item like this, you see, update stock is not ticked. So if you wanted to receive these goods in your warehouse, you'd have to go and do a delivery note, for example, from the sales invoice. The idea is you did say a sales order and then you did a sales invoice, you recognize your revenue, but you haven't received the goods in your warehouse. Normally, some businesses they do sales order, delivery note, and then they invoice from the delivery note. It depends on your rules or whatever the customer whom you are setting up the system for, or the use of the system tells you is what they kind of how they approach it. But for example, the reason I'm showing this is for this sales invoice. If you wanted to now receive this stock, you'd have to do a delivery note. But in some scenarios, especially when you're using a point of sale, because there is a point of sale in ERPNext, or even if you're doing what we call a cash invoice, you can raise an invoice and update stock at the same time you recognize revenue. So if I was to tick here, it will do a stock ledger and an accounting ledger, but this one just has an accounting ledger. And then the taxes, of course, it normally does a tax breakup for the items. Let me pick maybe an invoice with multiple items. I hope this one has multiple items. No. They are all for one item. And they have various states by the you can have partly paid, you can have unpaid, you can overdue if the based on your payment terms the invoice hasn't been paid and so on. Is that multiple? Again, nothing. But what I wanted to showcase is when you have multiple items here, for example, that you are selling or even purchasing, it does a nice tax breakup here. And then when you're doing invoice, I don't know if that will come along the way, but let's cover it here. You can do what we call a additional discount. Additional discount basically means you're giving a discount, whether a percentage or amount against the full figure of the invoice, whether it's based on grand total or net total, for example. Or normally you can give a discount based on individual line items of the invoice. Let me just duplicate this. So as I kind of mentioned, this stuff you can be checking what is here as far as the system is concerned because of time. But you can print, you can email directly from the system. You can do, let me duplicate for example this. Let me say the payment today when you're doing an invoice, for example, other features I just want to mention, for example, you might want to fetch, say, items from multiple delivery notes. You might have delivered multiple times, but you want to bring all the items in one invoice, or from multiple sales orders or individual sales orders. Or if you're doing healthcare, because ERPNext comes with an healthcare module, you can pick, say, healthcare service. So you can capture discounts by each of the lines instead of doing a global discount for the invoice. And assuming the customer had what we call advance payments, you can pick any advance payments, for example, for the customer. I know this one has one, an advance payment. You can do loyalty points, for example, against this customer, for example. Of course, you can have multiple contacts, multiple addresses. You can have the default shipping address and so on. You can have various payment terms for the invoice. For example, let me see what we have here. Basically, this means the invoice will be split into 40-60%. Another common thing, especially for service industry like us. You can have other payment terms. You as you wish. This is detailed, but sometimes you can even have your bank details here as the tabs for the open. You can have PO details as provided by your customer. You can have multiple because this could be going to debtors or debtors USD, for example. You can do commission against an invoice. I'm mentioning things that are available. So commission against a sales partner. This is like this is someone who sells on your behalf and you kind of pay them a commission. Or you can have what we call sales team against an invoice, and you can have multiple sales people against an invoice, especially if they are sharing. Maybe they sold whatever as a group or something like that, and you are sharing say 50-50 and so on. The other information and so on. And for each invoice, it will have connections to say delivery notes, sales orders, post invoice, timesheets, because you can generate an invoice from timesheets, for example, payment entries, payment request, invoice discounting, dunning, for example, if you're asking for, it's like you're sending a demand letter. Very applicable in some places. I'm not sure even here if it's applicable, but here you can do dunning where you send someone it's like a demand letter for payment, and you're even charging interest, for example, for the unpaid invoices or undue invoice. Let me just pick it up. It will come along way. But you can do dunning, for example, where you are demanding payments with an interest for late payments or whatever. And consequently, for each invoice, I was saying you can do a credit note. Actually, that's what brought us here. Let me just pick unpaid one. No, it doesn't have because it's not paid. But you can initiate a credit note from for an invoice from here, for example, or maintenance schedule. So part of it is in ERPNext, so these actions are kind of universal. And the create options based on the document you're on, the create options are kind of universal. For example, if you add a sales order, you can do sales invoice and so on. If you open a sales invoice, it can show you the options. Basically, it's the route after this at this stage. You can do what we call common party accounting. Common party accounting basically means you can have a supplier and a customer. So as a common party accounting party, for example, the supplier sells you things, but you sell this supplier stuff to whether it's a service or goods. So instead of you recording these and then you kind of pay them and then they pay you, you can do what we call common party accounting. Basically, it means they knock off. If they sold you goods worth 20,000 and you sold them goods worth 10,000, so ideally you owe them 10,000 instead of you paying 10,000 and they pay you 20,000 if need be, and the system captures that automatically. You can do payment requests. You can do payment entries. Payment entries are basically for receiving payments or paying your suppliers. Let me open another sales invoice that is not paid, because this is sometimes good to kind of show. So the way you initiate payments from the system is you do it from here. Payment request is where you're asking for payment from your customers or your suppliers have sent you and you want to capture those. But the payment entry in ERPNext, you can do for receive from your customers. You can do when you're paying your suppliers, or you can do a payment entry where you're doing interbank transfers in your ERP before you do it. Then you pick the mode of payment. You'll have to pick the customer. It will have the accounts, for example, the amount being from the invoice. You can even receive partially here, for example, 16. So it will apply just that amount. Sometimes you have what we call withholding, especially around here. So if you come in the, let me just do this so that you see. So assuming you're paid 16,100, but the customers withheld 10,000, I don't know how that could be, but generally you can do withholding amount, especially for Kenya. I'm speaking here for Kenya. You can capture the withholding amount directly in the payment entry, for example, and it will do it automatically. You have multiple unmatched invoices and an unmatched payments. So you can do what we call a payment reconciliation. Let me just open it. So the other thing is you can search for functionalities here if you know what you are looking for. So you can come and say you want to do a payment recon for a customer or even supplier. We have one with balances. Let me just pick this and I hope we have some. You can get and reconcile the entries. So what the system is, will pick all the invoices that are not matched with payments and the various payments that are there to match. Then you can either auto allocate and then the system will kind of match, or what we call reconcile between those. Semi-automatic is where you can set, you might want to do this in bulk and it does in the background and so on. Then we come to cost center and budgeting, for example. So ERPNext comes with the two default dimensions. I might use that one. So we have what we call a cost centers, and cost centers are per company and they in a tree view. So you can have say a tree like divisions, and then you can have all your divisions, and then you can tag your transactions against these divisions or cost centers, for example, whether they are purchases, whether they are journal entries, whether they are expense claims, and so on, for reporting purposes later on. The other default dimension is what we call a project, for example. Still another module, for example, but let me just open our project here for demonstration purposes. Basic assembly. I don't know what we have here. Yeah, that's okay. So you can have another dimension. So you can see against this project, you can tag your purchases, sales transactions, material requests, material issuance, bill of materials, timesheets. You can do tasks for Gantt chart and so on, expense claims. So eventually you can run your CP&L or profitability reports based on our project. But in addition to those two default dimensions, we have another dimension. We have another thing called the accounting dimensions, and let me show you how it kind of works. So let me use a scenario where you're doing non-profit, for example. So there's a non-profit module in ERPNext, which you do members, memberships, donors, and so on, right? So you want to have donor, who is not a default dimension, as one of the dimensions you want to kind of be tagging in your transactions, for example. So you can come to accounting dimension and define an accounting dimension based on donor doctor. Then you can say it applies to each company, and you can say it's even mandatory for P&L and mandatory for balance sheet, or you can leave them optional. Basically, if you take P&L, it means every time you're doing a P&L transaction like a sales invoice or journal entry, the system will require you to capture at least one dimension. And by the dimension, I mean a value, for example. You can even have a default value for that. Yeah, let me just create one so that you see. We might be wanting to create a dimension based on what? Asset. Yeah. Asset, but problem. So when you save this by default, the system will auto create them. Maybe I should have showed you before. But what happens is now, for example, if I go to my invoices, for example, here, and I say new, and I go to accounting dimensions, it will have the default dimensions, cost centers, donor, branch, and let me reload this. It will have cost center asset now, which is a dimension we just defined, donor, branch, and project. And even when you go to items here, for example, which are line items, those dimensions will still be replicated there, and you can capture your transaction. I don't see asset, but it's okay. if I came, let me delete this before I kind of use it anywhere. But you can see branch and donor, these are just accounting dimensions predefined. Then it won't appear here as a dimension going forward. Let me reload this. It won't appear here. And the reason that would be important, for example, is for example, even when you're doing budgeting and when I was showing you the accounting financial reports or any other report, then you can filter based on those dimensions. Or when you're doing budgeting, now that we are here, you can budget against a particular cost center, or you can budget against a project or one of the dimensions, for example, donor. So you just want to do budget against a donor called charity, for example, or branch, and then you want to pick a particular branch and you want to budget against that particular branch. And you can do fiscal year. And then when you do budgeting, you can check budgeting against purchase orders, material requests, or requisitions, or actual expenses. And you can stop, for example, if the purchase order will exceed the budget defined on the lines here, then you can stop, or you can warn, for example. Those are the various controls under budget. And then we have cost center allocation. So cost center allocation, you might have a scenario where some expenses are what they are distributed across various cost centers, say based on what do you call it, a percentage, for example. So for example, this is a cost center allocation for the various locations. So we know every time we do so we do marketing, for example. If it's 10,000 and we pick this cost center allocation in our transaction, the system will post 25% under Westlands, 45% of 10,000 under Eden Square, and that percent under main, for example. Then there's multi-currency. ERPNext comes with multi-currency. I'll try to run now going forward. You can define multiple currencies. You can do exchange rate evaluation and so on. Then we have what we call deferred accounting, for example. Deferred accounting is a scenario where mostly think of rent, for example, assuming your charge rent per year. Okay, you pay per month, but you have to pay 1 year in advance, for example. So in your books of account, you don't want to report, say, 120,000, for example. So you might do what we call deferred transaction. That way you book 10,000 for each month, but the transaction will be captured, say, in January and all. Even as, for example, part of what we offer is hosting. We kind of sell hosting for Frappe Cloud as partners, because they don't sell directly anymore. So, for example, we charge customers sometimes on say quarterly, half yearly, or yearly basis. So when we capture these in our books of account before we transfer, we kind of capture them as a deferred either revenue or deferred expense. For example, when we pay for say for a whole year or something like that. Similar revenue and expense, same concept. We have bank clearance, bank reconciliations in the system, or bank guarantees, for example. Then we have concept of subscription plans. Bank recon, those are kind of direct, or at least the everyday processes, but they are all here. Subscription is where you have, say, you're selling what? You're selling. Okay, you can do what we call auto repeat, assuming you have monthly, say, figures you sell. You can do an auto repeat of an invoice. So every month it kind of creates an invoice and so on. But you might have other complex scenarios where you do subscriptions like monthly hosting, for example, but it's kind of a bit. So you can do plans, for example. Let me see what we have here. I didn't check it. So you can have this, and then you can sell that as a subscription plan. It's the issue of subscription. They are plans, check online stuff. You can do shareholder management and so on, and share transfers, whether you're issuing shares, you're transferring or you're purchasing shares. So there's a way to manage that under share management somewhere. The other thing I might have not mentioned along this is there's something we call process statement of account. Let me just search for it. I don't know why I didn't record it here, but it's important sometimes. So there's usually a tool where you can it's basically a tool to automate sending a statement of accounts to your customers. And when I say statement of account, I mean the report I showed for GL, but I have a statement of account. Or you can define one for sending accounts receivable. Basically, you're aging for your individual customers and mass on a particular period to their contacts. And so it's kind of comprehensive and so on and so on. That is it, unless there are questions, frankly speaking. It became longer than I did.
I have some questions for later today.
Oh. Blah 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 blah. Customer payment line back to the lead. Yeah. So for this, I don't know if you mean whatever I'll show you anyway. But let me show you. There's something we call dashboard for any either party or related transactions. Let me pick what. Let me pick this person and I their transaction. When you go to a dashboard of every customer or even supplier, there'll always be connections. Okay, it doesn't go back to lead, but if you wanted, you can connect. But lead, you see, doesn't have a even that you can connect via customization, it will be easy. But it can take you back all the way to the opportunity quotation, in issuance, maintenance visits for the customer, sales orders, invoices, projects, and so on and so on. And if you had an opportunity anyway, you can always go back to a lead anyway. Or if you open a sales order, it can take you to. Let me open up. If you open a sales order, it still has a connection which can take you back to the related transactions, for example. And from those, you can always go back to them under connections, something like this. So it will show you the originating quotation, for example, and then from there you can go back to opportunity to lead and so on. Can you do bank reconciliation? The answer is yes. I hope I answered that. And you can upload actually, yes. We can do currency revaluation, yes. How does brokerage accounting? I don't know what is brokerage accounting frankly. From an accounting point of view, but I suspect if it's clarified, I can answer that. Yeah, bank reconciliation. Okay. If two companies have them on one account, but entirely such as blah blah blah. Yes. Actually, I should have mentioned another thing. When you're doing multiple companies and you're doing users, for example, there's something we call user permissions, and you can use those to separate who can access what. It might be let me open Manyaka, for example. And not just companies, you can do user permissions for anything. So you can come and define user permission. Example. So you can see it, let me just begin. Money, it doesn't matter. And then I can say company. And then I can say this person is only allowed to not to access and view and even know of the existence of just one company called, say, Navari Ltd, for example. And you can apply to all doc types. Basically means every transaction in the system. Or you might even want to limit, say, only to, how do I say, sales invoices alone. So it's usually very comprehensive. Or in a case where you have a tree structure, for example, and I was showing you call center, you might even limit, for example, you give them the upper level, and but you limit, they can't see the children, for example. But yeah, the answer is yes, you can limit that. And I saw this question. I remembered you can do what we call a intercompany transactions, whether purchase invoices, journal entries, or sales invoices. Basically, you're selling from one company to another, and then you receive from the other company, so on. But it's a sale like any other. But it's easier because you don't have to do it twice if you are doing multiple companies. I don't know, broker in your country, maybe. Yeah, you can ask Adam.
Thank you, Jai, again for the opportunity. I'll start with the brokerage accounting, just
Okay.
to make you understand. I'll give a case scenario.
Okay.
Let's say we have sales agent who receive commission based on the sales, and this happens only after you have received the payment from the customer. So we want a case scenario where the moment you're receiving the payment, acknowledging the payment from the customer, the system should be able to automatically allocate that percentage to the sales team account or sales personnel account. That's what I meant by brokerage account.
That would be a customization. It's doable, but we don't have that off shelf.
Okay. Okay.
Mm.
The second one is on the multi-currency bit of it. I'll give also a case scenario. I don't know if ERPNext support that.
It
Uh,
does.
this is my case scenario. We have a group of companies, right? Then
Okay.
we have one company that's used for consolidated accounting, that's consolidated reporting.
Okay.
So within the subsidiaries, we have different, let's say, countries, which means their base currency are set to use their respective country currencies. So we want a case scenario where when they are booking the transaction, we have a room to record the base currency, which is in their country reporting, no, local reporting currency, and then on the transaction to be able to tag the equivalence of the second base currency, which now reflects to the consolidated company reporting base currency. Is that doable?
I'm not sure if I fully understood the question, but let me show you what happens when you're defining a company. So we have this kind of structure. I don't know if you were in when we started. I'll try to show you what is there, and then you can see if it kind of answers your question. Otherwise, you can kind of clarify. So when you're defining each company, for example, there are various parameters I mentioned. You can mention the default currency for the country. So you can have multiple companies in different countries, say one Kenya shillings, Tanzania shillings, and so on, and country, different tax IDs, and so on. You can even say the chart of accounts auto-generated, they depend on the group or the parent company, but you can allow to create different accounts for the child company. Basically, much as we are borrowing and inheriting accounts from the parent, there are some scenarios you might have different or special accounts here for the child companies, for example. Now, when we come to multi-currency, much as we have a base currency for each of the companies, for example, let's say we are doing a purchase invoice, it doesn't matter. Uh, Let me pick and you can define the default currency for each party. By party, I mean either supplier, and so you might be using default, your base currency is Kenya shilling, but you can go and say for this supplier, we almost exclusively deal with them in USD, for example. Let me just pick one here. I don't know why it is closed down. Maybe I'll prevent. So the system by default will auto pick the default currency. Yeah, well, first based on the party and then based on the company.
Okay, if I may get back to you on this, what I'm
Okay.
trying to see if it's achievable. Okay, let me use on a transaction level part. Let's say, for instance, Navari. Navari
Okay.
may have customers who are based in Uganda, Tanzania, or in
Okay.
any other country,
Yes.
and for them, generally, they prefer they transact in USD,
Okay.
which is let's say a common global transaction currency.
Okay.
But in your setup, your base currency is Kenya shilling, right?
Okay.
So
Yes.
you want to have a case scenario where when you're booking an invoice or booking a payment for those given customers, you are able to tag both your local currency and their transaction currency. In that, let's say when you are reporting, you may decide to report with their currency or your currency. What I mean is, we can if you can have two base currency, one local currency, second for second base currency for
Reporting.
second reporting part.
We actually don't have a reporting currency in ERPNext. I've been meaning to go back and read on Dynamics and see if I can write that feature. Not build it, at least request for it from Fabi. But what we have is you can mention, say, USD and the exchange rate, and then the system will capture this. And then the report, maybe you can switch currencies. But I kind of get what you're looking for. I don't think we have that, at least for now. But you can do USD, and then you do exchange rate. But in your transaction, it will show you very well. Let me not answer a question I'm not asked, but let me show you it will come out. Oh, there's another. So it will show you, say, the amount. Where is this? It will show you the amount in local currency somewhere here. So it will always show USD, and then it will show you the respective Kenya shillings base currency.
Right, I get it.
But this is what we have.
So what you mean here, you will have to be forced to restrict given GL code for that specific currency.
No, it used to be that before, but now you can. So today I can transact with you in USD. Tomorrow I can change. Oh, it breeds issues. Oh, that question needs to be clarified, or someone else can answer, please.
It's okay.
Yeah.
Have now second question. We can leave that for discussion for the sake of time. Second question, I'll go to the accounting dimension. Wanted to understand something there. Let me
Okay.
grasp the concept. You are talking of analyzable entities. Thus, if you have defined the accounting dimension, you can have a default value to be tagged on a transaction when booking a transaction. I want to know that a default value applies across all the analyzable entities, or does it only apply to where you have restricted it?
So when you do default, for example, here, let me just pick. So number one, you can have branch, and then you can have Mombasa, for example. Then I can have say another company, and I can say the default branch there is a what is this? But it applies all over where we have a branch, for example. No. Let me pick another one. Climani, for example, and I can make them moderate. So if I do say a sales invoice, for example, for Navari Limited, by default, the branch dimension will auto pick Mombasa Road. But I can go and pick that. It's only that this is the auto fetched one on the transactions, and that applies all over stock transactions, purchase transactions, and so on, journals, and so on.
Perfect. And now, in case the need arise, just to do restriction, preventing user from changing the code, is that applicable?
Yeah, we have accounting. Actually, I should have covered that. Accounting dimension filters. I think we have accounting dimension filters for that. Actually, I haven't used them in production yet since 2018. That means I may not answer that question very deeply. But we have this concept of accounting dimension filters to kind of limit or even limit which dimension applies to which account and so on and so on.
Perfect.
Something close to that.
Perfect.
Yeah. Good. I don't know if there are any more questions. So yeah, I answered. If there are no more questions, let's stop here now. Thank you all for attending, and thank you for the organizers.
Well, thank you everyone for joining our today's webinar. I hope that each and every one of us, we found this session to be insightful. So we'll be hosting these webinars for every Friday from 11:30 a.m. to 12:30 p.m. for every Friday. So we welcome you to join our next webinar, and you can invite those who are interested. If maybe you have individuals or organizations who are interested in open source ERPs, so you can invite them. In case you have any questions, reach out to our email, navarisolutions@gmail.com, or you can just send a message to our LinkedIn page, that is Navari Limited. Thank you all, and see you in the next session.
Thank you.